Have you ever wondered, is my financial advisor actually helping me or just collecting a fee? Then you need to watch this episode right now. Hello, my fellow Ripplers. This is Chris Miles, your cash flow expert and anti-financial advisor. This show is for you. You want to become work optional, where you work because you want to, not because you have to, because you have enough passive income coming in to cover all of your expenses so that you work on your own terms. You control your life. You have the freedom and the ability to not just quit your job if you wanted to, but you get to do it on your terms. And even better yet, you get to spend the time doing what you love with those you love. And it's not just about you getting rich, it's about living a rich life, because as you're blessed financially, because you are a Rippler, you want to bless the lives of those around you. That is exactly why I'm here to do this for you today. Thank you for tuning in, for sharing, binging on these episodes like you guys have been doing for so many years. Thank you for helping us go into our 11th season and now almost 950 episodes in. You guys are amazing. You're incredible. And you are the reason why I can create a ripple effect through others' lives. So thank you for being a part of this today. Hey, if you've been wondering like how to the best, deepen your value, how to get more out of this, if you haven't subscribed to our YouTube channel, the Money Ripples with Chris Miles channel, do that today. There is not just the videos. We have our podcast. We have other videos as well that give you great instructions, give you more stuff. And by the way, if you want to go further down that rabbit hole, just go to moneyripples.com and check that out now. All right, so let's talk about financial advisors, right? Because the statistics say this, is that 4 out of 5 people actually like their financial advisor. Yet, every 3 to 5 years, they fire that financial advisor. So that's the interesting thing is, although 80% of people actually like their financial advisor, about three to 5 years in, they end up firing them. And I guess the stats kind of make sense, right? If you're in those 3 to 5 years, you might be the 80%, but then eventually you just say enough's enough and you switch. And you're probably wondering like, is this person actually doing this for me? Are they just here to collect a fee? What is it really? And how do I really know what questions to ask to know whether I should be changing advisors, whether I should even be having these financial advisors in my life? From my experience as being a former financial advisor, this is what I would tell you. So as I pull back the curtain and kind of let you know what's behind the curtain there, that the wizard, AKA financial advisor, isn't as cool as you think, but there is a solution. So let's dive in. All right. So anybody, if you just watched this for the first time today, I used to be a financial advisor. Over 20 years ago, I was the salesman in a suit. I was licensed not to make you a lot of money, but ultimately licensed to sell you products. Because that's the truth. As licensed financial advisors, you are given a license, the ability to sell people mutual funds. For example, if you have a securities license, if you have an insurance license, you have the ability to sell insurance, right? A lot of times you get insurance salesmen that say they're financial advisors. And then you get some guys that have securities that can sell mutual funds that say those insurance guys aren't financial advisors. Don't trust them. Trust me, right? And everybody has their own philosophies. But I'll tell you, from working in that industry, the thing that woke me up was after I sat down with my dad, who had financial advisors helping him for years. He also packed money in his 401k, paid off all of his debt, including his house. He was 100% debt free, the penny pinching saver. And yet, when I sat down with him to look at his money for the first time in my life, and I sit down and I look at everything, I say, Dad, you're 61 years old, but if you want to retire today, you only have enough money for about the next 5 or 6 years before you run out. So essentially, you're going to have to die in about 5 or 6 years. Luckily, you have Social Security and might stretch it out to maybe 10. And so he had to work into his 70s because of this reason. Now, this got me questioning. I said, well, what am I doing? Because I believed it. I was the guy that bought into it hook, line, and sinker. I believed that financial advisors were out there helping people. And I also believe that financial advisors are believing they're out there helping people. And to some level, they are. However, the odds are not looking good, okay? Because the statistics show this. And this is when it became clear to me, is when I was challenged on this fact. This guy actually hired me a financial advisor. Then he quit. And then he went to go do real estate investing. When he asked me, he says, Chris, how many of your clients are actually financially free where they don't worry about money? And here's the thing, guys. I knew that I had financial advisors that were, or not financial advisors, but clients that had had decades of advice from before, just like my dad. And I said, well, they all worry about money because they all worry about outliving their money or running out of money too quickly. So none. I don't think any of them would be financially free based on that definition of not worrying about money. He says, okay, That's an honest answer. Okay, I didn't expect that from you. Okay, next question, Chris. How many of you guys as financial advisors are financially free, not off the commissions you're earning, but actually doing these investments? Because if anybody's got it figured out, shouldn't it be you? And as I really thought about that for a second, I said, well, let me think. There's guys been working here since the 1970s. This, by the way, was at the end of 2005, going to 2006. So those guys have been working there for 30 years, since the 1970s. And I don't see them. In fact, they're probably some of the cheapest guys I know, and they still feel like they're broke. I don't, and they don't seem like they can quit. Like they have to keep hustling and working. So I'm going to say none. He said, well, there's your problem. And this is the thing, guys. Like my dad taught me this. He said, Chris, like, don't believe people. Don't take them at their word. Of course, my dad was born at the end of World War II. He was the front end of the baby boomer generation. So he learned not to trust everything, right? Don't trust your ears. Don't trust the media. Don't trust what everybody's telling you. And us as Xers kind of believe the same thing. And he says, well, just, look for evidence, like look for proof. And Tony Robbins said something kind of similar. He says, success leaves clues. And so what are the clues? What are the evidence, right? And I've shared the statistic on here before is that, according to Fidelity with their statistics right now, I know Fidelity doesn't have the richest people in the world, but they do have a lot of middle class people, the people that are trying to save. And there's even rich people that use Fidelity too. So it's not just the middle class, but obviously there's a lot of middle class that use them. Well, guess what? Out of those that have 401k accounts, only 2%, really less than 2%, have $1 million or more. Now, understand this. A financial advisor will tell you you shouldn't be pulling off more than 3% a year. A good one will tell you this, right? And I'll get into the questions about what you should be asking these advisors, see if they're good or not. But they're really like $1 million, you can only live on 3%. That's $30,000 a year. If you're in your 60s, if you're younger, it's less. If you're older, if you're in your 70s, you can live on the 4% rule they talk about. But I understand the 4% rule was debunked years ago. They've changed that number. It's now 3% for in your 60s. So that's 30,000 a year. Most people cannot live on 30,000 a year, not very comfortably at least, especially with the way inflation's going. And so most people usually have to have more than that. That's why when Transamerica, they did a separate survey of these same people that had $1 million or more in their retirement accounts. Remember, Fidelity, out of their 45 million, only have about 900,000 with $1 million or more, right? Well, of that, 35% said it'll take a miracle to be able to retire. A miracle. That means they don't even believe it's possible because why? If you're at $1 million, 30,000 years, not enough. You feel like you might have to have 2 million or more because 2 million would be 60,000 a year and so on and so forth, right? Because again, you're fearing running out of money too soon. And here's the thing, guys. I mean, again, I sold it. I was telling you to set it and forget it, put away for the long haul, especially when the market went down. I would say not just put away for the long haul, but dollar cost average in. In fact, this is the very thing I told my father-in-law. When he's talked about meeting with a particular company, I won't mention their names, but they're very popular in the financial advising space. And I told him, and this is when I was already questioning everything. In fact, I had just quit as a financial advisor in March of 2006. I said, I'm done. I'll never teach about this again because I realize it doesn't work. I see it. I realize I've been selling something that's just a dream, right? I'm selling people on hopium. And so he told me, he's like, Chris, what do you think? Because I'm about to meet with my financial advisor. I almost said the company name. I'm about to meet with them. And what do you think? I said, here's the thing they're going to tell you. You're going in for your annual review, right? They're just going to tell you, okay, good. Money's been growing, or you lost a little bit last year. If you did lose, if the market did happen to lose, which hasn't happened much recently, but if it did happen to lose, they'll just say, well, at least you didn't lose as much as what the market's done, right? So the market lost 20%. You only lost 19. So that's better, right? Usually it's not that way. But they might try to spin it in a positive way, or they might just say, yeah, the market went down, but you know what? This is a perfect opportunity to buy more. So they're going to tell you the dollar cost average. Just keep buying more because it's on sale. Isn't that the most beautiful marketing sales strategy tactic, really slick snake oil salesman tactic ever is, hey, market's going down, buy more. Market's going up, keep buying because it's going up. It's never a bad time to buy. And by the way, the financial advisor gets paid whether you make money or not, because as long as you have money with them, assets under management, they get paid. Now, I know there's a few variations. There's some financial advisor that might, and we'll get into this about some of these questions, right? Some of them might just charge a flat fee. Some of them might charge percentages. It varies. And again, I don't think financial advisors are evil. I think they're just a cog in the big system of working for these big financial institutions that aren't there to watch out for your best interests. They're watching out for their own. And the financial advisors, just the lackeys, just the cogs in our system to be able to follow and give that advice. And how do I know? Because I was brainwashed to believe the same thing. Okay. And I know there's some financial advisors that are the exception to the rule. There's very, very few, but there's some that actually do challenge the status quo and then do challenge that whole system and try to do something different. But even then, many of them are binded together. They're kind of, really bound by certain laws and limits and things like that, which is why I dropped my securities license in 2005, because I realized, why am I selling something that really is high risk, mediocre returns? Okay. So that's where I'm coming from. Now, I'm just going to dive right in now. Let's talk about these questions. I think there's about 7 questions or considerations you should think about. And if I think about it, I might even throw in a few bonus ones, just depending. But here's where they are. Number 1, look for experience. Financial advisors, just so you're aware, like I made it 4 years in that industry, and that's doing a pretty good job. Most financial advisors don't make it past the 2nd year. Okay. Now, here's the issue I have is that I look for experience. Now, I look for experience, not just that they know how to quote stuff or they know their products. That is helpful to some level, but I'm looking for experience where they've been through ups and downs, market cycles. Here's the challenge you're going to run into. Since 2009, the market's only gone down once. Now, maybe 2025 might be a down year, but we don't know yet, right? It's not over yet. But 2022 is the only down year since 2009. 2009, March 2009, hit a market bottom. It's come up since. So 16 years, we've had almost a straight up shot, way above the average. So the market is way oversold at this point. Now, if you're a financial advisor that say started in 2010, guess what? You don't really know what a down market is. 2020, let's be honest, that didn't really count. I mean, we watched a dip in March and it came back up again in the spring, so like we watched this quick dip and it popped right back up, didn't it? And it just skyrocketed to the moon, so when you get financial advisors, I look for experience. I look for those that say, you know what, I've learned from stuff. I was, I don't want to say birthed. That sounds kind of disgusting. I was created as a financial advisor. I became a financial advisor right after 9/11, right? So right in the middle of that Y2K recession is when I was created in that. I was born in that that time period, right? So I had a uphill battle. I had to learn what it was like. I remember one of the first people I sat, my friend, right? I sat with a friend of mine and his wife, and we're talking about financial stuff. And I think we set up like a $50 a month mutual fund. I can't remember now. It was a while ago. But I asked for referrals, and he referred his brother. I called up his brother and I said, "Hey, your other brother, he told me to reach out to you. Actually, I'm a financial advisor, and just seeing what I can do to support you, or what I can do to help out, and maybe even, look at, give you some advice based on your situation." His brother said, "Listen, I just got laid off from Enron. I had over $1 million in my retirement account, and it's now all gone. It's wiped out. I don't want to talk to anybody about money right now." And so that's what I experienced back then. That's how nasty it was, So when it hit 2004, 2005, it was actually easier because the market was coming back up. People were still leery, but at least the market was recovering again by that point. And then of course I saw the Great Recession, right? The global financial crisis. We saw that hit. And so I've saw a lot of things. I've seen a lot in this market, which is why when financial advisors tell me, especially those that are usually under the age of 40, or even sometimes they're older, but maybe they joined the industry later because they switched careers or something like that. I just tell them, it's like, listen, like, you don't know what you're talking about. You don't know what you've seen. You don't know anything. And so if I were to look for an advisor, I would look for somebody who's been experienced. I would say minimum at least 15 to 20 years and has a realistic, humble approach. And that might even be like a bonus subset of that experience. It's a humble approach. Because I'll tell you this, in my experience, there's been a lot of financial advisors that have 30 years of experience, but really it's 30 years repeated 1 year at a time. It's just 1 year of experience repeated 30 times. They learn what they learned in the beginning, and then they just keep teaching the same thing over and over. Think of like Dave Ramsey, right? Again, good guy. I know he's helped a lot of people. But if you think about Dave Ramsey teaches some of the same things that aren't true anymore, right? Or never were true. Like, for example, when he tells you that the stock market's averaged 12% a year, that's false. It hasn't, right? I've shown many, many times on this channel and master classes I've done as well when we've done live classes and whatnot, so many times that the market average right now for the last 30 years has been about 8.4%, depending on the day of the market, right? If you've been following this podcast, you're probably looking for great ways to create passive income right now, right? Well, we got you covered here with Central Lending. Central Lending specializes in alternative investments that actually are designed to create steady returns and long-term financial security for you and your family. Now, they prioritize transparency. They love, building those strong relationships, giving you that confidence and peace of mind, knowing that you have your money working harder for you, so you don't have to work so hard for that money. You want to learn more how to do that? Go to centrallending.com and check out what they've got today to create your passive income and wealth creation right now. Number two, they should be independent, right? What I mean is this: not only have they have experience, but they're an independent. They could be a broker, independent where they're not captive to a specific company. This especially is true in the insurance realm, where I know there's some people that even hired me as a consultant to help them with passive income, where they might work for a captive agency, where they have to work for only that insurance company. This is also true of certain financial advisors. They're told they can only work with that broker. They have a non-compete. They cannot work with other competing brokers, right? And so be aware of that. You want somebody who's independent that can offer things outside of that company. Because the truth is that there's no one company that can do everything well. That's why even where I only kept my life insurance license, right? That's why I'm independently brokered with different insurance companies, because I want to be agnostic to it. I don't want to be so fixed in that I can't change something. So be aware of that. So make sure you find somebody who's independent. Three, which leads to number three, is fee-based, right? There's commission and then there's fee-based. And sometimes there's both, right? I will tell you this from my own personal experience. Being a commission-only advisor is dangerous. And this is why. Because even with all the good intentions that I had, and by the way, I believed in a zero-sum game. I had a scarcity mindset when it came to money and business. I believed that I would have to lose on my commissions so that my clients would win. I don't believe that anymore. I believe that you could still win as an advisor and still do what's best for the client, giving them lower costs, and things like that. But the unfortunate thing is that in the industry, there's all these companies, and this is true even if you're independent. So be aware that even if somebody's independent and maybe they're experienced, the one problem you're going to have, and I know because even when I wanted to do the best for my clients, this was still in the back of my mind, is that there are certain companies or certain products, even within certain companies, that will pay more or less percentages on those. And so when you're commission based, right? Say that, for example, there's an annuity you could set up for somebody. One annuity pays you 4%, paying the advisor, I'm saying, pays the advisor 4%. But then there's this other annuity, has all these bells and whistles, and they'll pay the advisor 6 or 7%. If you're an advisor, and you're looking at these and they're like, well, they're kind of similar. Maybe that one that's 4% might be a little bit better for the client. But you know what? This one over here, it's not bad. It's okay. It can help the client still. Notice what I'm doing right there? There's a little of that rationalization. This happens all the time with advisors. They might just say, although I know this can help the client, but this one pays more and I'll make 50% more commissions. And they might only pay maybe, say 5 or 10% more in costs, right? And they might say that's good enough, right? Because I make more, they make just a little bit less, but still it's good. It's still a good deal. It's not the worst that's out there, but it's not the best. It's still a good product and it pays me more, so I'll do it. Just so you know, in the infinite banking space, right? When we talk about life insurance and stuff, this happens a lot. I've seen many people do videos saying, hey, these are the companies we use because they're the best. When I know for a fact, because I've talked with these companies, I've ran their numbers, I've had them show me their best. And I compare it with other companies and their best. And I'm comparing all these companies independently. And I will tell you, the only reason that those companies get pitched by those people, and some of them are on heavy on YouTube or social media, is because they pay a higher commission than these other companies. That's it. That's the only reason. Sadly, I've had a break that kind of drop that bomb on a lot of people. And sometimes they don't believe me. Sometimes they say, nah, I think it's got to be good, because they're so convinced. Right? These people are so convinced this is the best. No, it's the best for the agent or it's best for the advisor, but it doesn't mean it's the best for you. And it might be good. It doesn't mean it's the worst out there, because they'll show you things that are worse than that, but it may not be the best. And the problem is this, is that, I don't believe that advisors should work for free. I don't think you do either, because you don't believe you should work for free. We get this, right? That makes sense. But I do believe that if you give great value to your clients, right? If you give them the best value, not just customer service, but you give them the best value, saying this for you, regardless of what I get paid, this is the best. You're going to want to use those people time and time again. And this is why I shy away from commission-based people and just go for fee-based. Now, I know with insurance, that's different because they don't offer a fee-based model necessarily. You could still hire a fee-based advisor, but it doesn't mean they'll necessarily give you the best there because they're probably trying to do everything. Ooh, that's a bonus for you too. Are they the jack of all trades or are they an expert in an area? Right. That one's a big one. I try to be a jack of all trades. It's hard for me to keep up with everything, and so beware of that. That's just a little bonus for you too. Like if they're trying to do a little bit of everything, try to be the expert in all areas for you. That's a little bit tough. Or they have a low risk tolerance. One, this is if this is the question or the phrase you should be listening for when you're talking to a financial advisor and asking them about their investment philosophy and what they think about risk and things like that. Now, some of them, even if they're good, they might talk about risk, say, well, everybody has their own risk tolerance. Here's a questionnaire, take that, right? And then they just throw you in whatever risk tolerance is based on your questionnaire, your answers that you gave them. So you might be more conservative or aggressive. But I look for somebody who actually avoids saying this phrase: high risk creates high returns. If they tell you anything like, hey, you got to take high risk, get high returns, right? Or, like that's, yeah, the high risk tolerance, yeah, that's where you get the better returns. Run away from those people. Let me ask you this question. The definition, well, here's the definition of risk according to the very test that these guys take. The definition of risk is chance of loss. So high risk creates high returns. So when did a 90% chance of winning become or 90% chance of losing money, chance of loss, right? 90% risk. When did 90% chance of losing become a 90% chance of winning? Does that add up to you? It doesn't. 90% chance of losing means you have a 10% chance of winning. If high risk really created high returns, shouldn't we all just go buy lottery tickets? High risk there, light, easy chance of loss, but you can win big. Now, financial advisors say, no, we just got to balance it out the right way. But here's the problem, guys. Like in mutual funds, especially those that are in equities and, there's international stocks and funds and things like that too. A lot of them are high risk, but they pay mediocre returns. So when they're telling you high risk creates high returns, here's the thing. Ask them, does the company you work for, especially if they work for a broker or something like that, do they take high risks? Do they invest their money in the market? Now, the advisor might say, oh, yeah. Like, in fact, this bank or this institution is one of the largest investors in the stock market today. But then you're going to ask a follow-up question. You're going to say, yeah, but is it your clients' money or is it actually their own money? Where do they make their money? Now, if this person's honest or even knows that answer, they're going to say this. They're going to say, well, they make their money from the fees that they charge the clients, right? The fees for the products or the fees for this, those sort of things. That's how the advisor gets paid, right? They get paid from those fees or the assets under management or AUM, right? That's what they get paid on. Okay, is that high risk? I believe that low risk, low calculated risk, especially if you can minimize risk to maximize returns, is a better philosophy. There are ways to take lower risk to get higher returns, much lower than what they tell you to do, which is high risk, create high returns, which is what all the investment companies want you to believe, while they take all the low risk. They get their guaranteed fees. They get their guaranteed stuff off of that. They make money off of you no matter what, whether the market goes up or down. Yet you are the one that really takes all the risk. They transfer the risk to you, not the other way around. Number 5, this one, it's going to be hard to find. The advisor is cash flow focused. Cash flow focused. This means they're not just looking out into the future, but they're talking about how can we help you in the here and now? What can we do to improve your cash flow situation today? I don't know how many financial advisors you see that will say, you know what? Hey, based on what I'm seeing here, here's a certain debts you might want to pay off versus others. Or, you know what? Here's some investments you can actually do that'll pay you passive income today. And no, you don't have to gamble your money away into high risk deals or the speculative venture. These are things that have been actually paying out for years and years and years, right? I'll tell you, in my experience, very, very few. I know of one guy. I'm not saying I know every financial advisor, obviously, but I've known hundreds over my career. I know one guy that's got a securities license that also is a fan of also doing real estate investing. And even he struggles with trying to have a foot in both worlds because he has one world trying to tell him to get away from real estate investing, get away from alternative investments and just do mutual funds because that's what they make money in. But at the same time, he also knows he's made more money in real estate than he ever has in his own mutual funds. right? So he knows where he's made the money, but yet that other world keeps trying to pull him over, pull him away. So be aware. This is the one thing that's not being addressed is that it's always set and forget it. You're in it for the long haul, but they never really address anything about the here and now. Now they might say get debt free. You got Dave Ramsey, CZ Armin, you got people like that talking about that, but that's the extent of their advice, right? Live on a budget, all that kind of boring stuff. Oh yeah, well, how do I reduce my taxes? How do I make sure I reduce my taxes every year? You ever talk about that? No, not really. How about this? Are there certain loans that maybe I shouldn't pay off at all? Maybe there are certain loans I should be refinancing right now and extending out the term. Will they say that? Not likely. Will they talk about what are things you can actually do to where maybe we can improve our cash flow? Like I just dealt with a situation. I know I just talked about this on the podcast last week. So look at last week's podcast about this. But when I talk about net worth is worthless, right? I mean, these people had net worth. They felt like they were drowning. A financial advisor, they don't get paid to tell you how to budget your money or to like figure out like what loans to pay off and things like that. They don't do that. Now, there's so many advisors are like just get paid to sell you a product, or they're going to charge you a hefty consulting fee, right? A very hefty one. And that's typically the extent of their advice. And if there are some of those out there that might be like counselors, debt counselors, or whatever, okay, great. Well, that's debt. But what else? I mean, what can get me past zero? What can get me to the next level, right? They just don't do that. That's one thing you got to be aware of, right? So you want somebody who's cash flow focused. What improves my cash flow today? Because just like that example, the people that had high net worth, because they weren't addressing their cash flow situation, they felt broke. Even though they had 3.5 million net worth, they felt broke each month because the income wasn't coming in. They were having it tied up and locked away from them instead. So be aware of that. Number 6, they gotta have a team of experts. And they got to have integrity as well. So a team of experts, I kind of tied this in with the jack of all trades, but you do not want to have a financial advisor that's also an attorney, financial advisor that's also a CPA, right? Because the truth is you can't play in all those worlds and actually be good at that place. Now, I'm not saying that somebody can't try to do it. I have seen some CPA financial advisor combos out there before, but again, usually they're okay on one and maybe a little bit better on the other, or they're just average on both, and I believe you should have the best. This is why I'm not a CPA, right? I'm not an attorney. I don't care to be. Heck, I mean, even different types of insurances. People say, hey, you have an insurance license. Can you help me with this? I'm like, I have an insurance license to do that, but I won't help you with that because instead I'm going to refer to somebody who does it better because that's their forte. That's what they focus on. Because I've been in this game long enough to know that I don't know everything. And the truth is things change all the time. And I have to keep meeting with those people to learn from them, right? So the great thing is you want to have a team of experts around you, a financial team that surrounds you that helps you. Now, here's the big thing that I'll put as a kind of a bonus here is that this team should have integrity. And the best way to have a team of integrity is one, you have integrity yourself because you do attract the type of person that you are. But two is make sure that they are people of integrity, that they are somebody that says, you know what, I don't know the answer. Let me help find that person, right? Or whatever it might be, or let's talk to somebody else. And then the last one, and this one you're going to find is almost never true. I found very few people that fit this category. And the 7th one is financially independent. They have enough passive income. They have enough income coming from their investments that they don't even have to work with you. That is hard to find. That is difficult, very, very difficult to find. Because I'll tell you, just like I was asking that one question, right? He's like, well, how many financial advisors do you know can actually retire off these investments, not just live on the commissions? And it's hard to find. That's the best, by the way, that's the best way to give advice because when you realize you don't have to make money off people, you don't worry about that conflict of interest. You don't worry about whether you're making money off them or not. I did speak at an event in Florida, actually Central Lending, who we just advertised on this podcast. I was speaking at an event in Florida at their event, and they did have a financial advisor speak right after me, right after I threw out all these money myths about, the 4% rules debunked. I threw out about the whole high risk, high return thing. I threw out about the inflation is not really what they say it is, and that the market returns aren't what they say it is. And basically all the numbers are false. And then what does he do? He goes and he didn't see my presentation. He came at the very end and he starts teaching the very same things I said were all lies, the very lies that I had taught as a financial advisor. And then he did hear the very end because he's like, well, I didn't retire when I was 39, but I did retire when I was in my 50s because of dividend paying stocks, because I just go for those 5% a year paying stocks and that's what I get. Just knock that microphone there. Um, and I thought, well, that's interesting. Now, did he make his money because the market performed so well that he was able to make money, or because he was so good at his job as a financial advisor, made so much high income there and sacked away enough money for so many years that finally that 5% a year was enough for him to live on? I will tell you it's a latter pretty much every time, right? I find guys that are very good at selling people and they'll get a lot of assets under management. They'll get paid really, really well. Then they'll take all that money they're earning, the income from their profession, not from their investments, but from their profession. They're good at making income. And then they just throw it into places that maybe make a mediocre return, just like the stock market or mutual funds. This is what he did, right? So let's recap the seven things you should be asking. One, how much experience do you have? Like, how long have you been a financial advisor, right? How long have you been a broker here? Two, are you an independently brokered, or are you captive with your company? Three, are you fee based or commission based? Which is it? Be honest and upfront, please. Four, tell me about like what I should do with like how much risk should I take? You know, most people will answer it depends. But the real thing you look for is like, well, what kind of things do you do for yourself? Not saying that I'll do it, but what do you do for yourself? What do you believe about risk? And see if they say high risk creates high returns, or if they say, I don't believe that. If they say the latter, awesome. Five, hey, so what's your philosophy about investing? What if I want money now? What do I do? Six, is it just you? Do you work with a team of financial experts? What if I need an attorney, accountant? What if I need something, different types of insurances? Is it all you, or do you have other people you recommend? Tell me about that. And then the last one is, could you live off your investments right now? Even if you didn't get paid a single dime from your company, if all that were to stop, you had no more clients with assets under management, could you comfortably retire right now? And just see how they answer. That's a very interesting one, right? It creates a lot of discomfort in almost all financial advisors. Some of them might just flat out bull-faced lie. Some might just say, yep, I can. Now, if you're looking for something different, you don't want to do the traditional slave and save, set and forget it kind of crap, and high risk creates high returns, and you're just dollar cost averaging forever, hoping that maybe it's going to be enough someday because they're telling you to pack all this money away while they get paid, but you don't. If you're looking for something different, hey, let me answer those questions for you from these. Let me go back to the seven again, because I want to make sure I remembered them all in order, right? Number one, so experience. How much experience do we have with Money Ripples? Now, although Money Ripples was set up 13 years ago, I've been doing this, as I mentioned, now for about 23 years. Actually, yeah, over 23 years. So 23 years I've been doing this. I've seen ups, I've seen downs, as I mentioned before, that kind of thing. But I'll tell you, as you already know from my story, I question everything. I even question the stuff that I'm teaching you right now, just in case I might be wrong. Hey, just so you know, like I used to rip on people about doing Bitcoin. No, not so much. Now, I do still tell people to be aware, but anybody who's followed me long enough knows that my tunes change. Sometimes I've softened up on some things. Sometimes I've gotten firmer on some things. But overall, like I'm always learning. So yes, I have experience, but I'm not done yet. Number two, am I independently brokered? Yeah. Well, one, I don't work with these financial institutions because I don't even do that. By the way, not only do I not work with them, but I refuse to go to most of any trainings that are offered to me, because I know that usually it's brainwashed to sell products, not actually help people become wealthy. And so I instead usually go and meet with other wealthy people and do like masterminds and things like that, and do things that way to build and gain my experience that way. Three, are we fee based? The answer is yes. And in fact, we don't take anybody on unless we know they can make more money than the fee they pay us. And so that's why we have you do the passive income calculator, or the work optional calculator that's on our website, moneyripples.com. That's basically a way to pre-qualify to make sure, can we actually help you more than what the fees will cost, right? And so that's one thing we always try to ensure, is that you'll make more money in a year than what you pay us, right? Also low risk. I believe that low calculated risk can create the highest returns possible. I love finding ways to minimize risk, to do things that way. Like for example, with real estate, it's not just, hey, let's find a good operator, somebody who has 20 plus years of experience in this space, but let's also find something that gives us collateral. So if anything goes wrong, we have an asset to claim on, right? We have something we can capture versus just hope and pray that money comes back. Cash flow focus, that is the main focus that we do. We focus on the here and now. Just like I mentioned with that couple that had 3.5 million net worth, yet they were drowning by 4,500 a month. By the end of our call, show them how to make that 4,500 a month back and then some. And so, yeah, that's very much about that immediate need to help them breathe again, feel better, even though they were asset rich and just cash flow poor. We just had to reverse that and make it a cash flow focus. And then, of course, team of experts. That's the main thing that we use. That's why I say, like, the only two things we do is, one, we are the consultants, we're strategists and connectors, and we connect you to those team of people. So we have attorneys and accountants, multiple to choose from. We've got insurance specialists of all sorts, even investment operators and specialists of different natures and whatnot. So anything financially related, heck, even on the business side of merchant accounts or whatever it might be, we've got connections, right? So again, we refer out to those people. Our philosophy, by the way, my philosophy, which is our team's philosophy too, is that you shouldn't do something unless you do it the best. Like in business, if you don't do it the best, find somebody else that does the best and you send people that way. But if we're the best, you be the best in that arena. And then financially independent, the answer is yes. Like I mentioned, I did it twice by the time I was 39. Twice because I screwed up the first time, after 2006 and 2007. Went back in the rat race because my investments started going south, plus business was going south at the same time. So it was just hit me from both sides. Came back from that, didn't go bankrupt, but had to dig out from a big debt hole. And then by the end of 2016, we did it again. And still to this day have enough passive income coming in, 50,000 a month approximately, just so you're aware that's coming in, whether I do this business or not. Either way, if you're looking for advisors, even if you're looking for the traditional advisors, ask them those questions. Great way to screen them through just to see what works, right? And see who's going to be maybe a good matchup for you. And that's what I think. Like, you should always work with people that you resonate with. If you don't resonate with me, for example, don't work with us. Like, we don't work with you either if you don't resonate with us. It's gotta be that love connection, so to speak, right? So find that advisor that is a love connection for you, but be sure to ask them good, challenging questions for them. You are the boss. You're the one hiring them. Remember that you are in the power of control here. You're hiring them. If at best you're partners together, but you're not begging for them to work with you. What you're doing is you're trying to see, are they the right fit for you and your family so that you can prosper, you can become wealthy as well. And I'll just end with this, is that if you're looking for any advisor, look for somebody who's been there, they've done it, and they're still doing it today. Don't follow people that haven't done what you're trying to accomplish in your own life. Follow the people that actually have done what you're trying to accomplish, and then work with them. Follow their example, follow their counsel, question everything, of course, but be willing to follow the example of those that have actually been there, they've done it, and they're still practicing and doing those things to this date. Go and make it a wonderful, prosperous week. We'll see you later.